One of the things that is quite interesting, however, is that when you look at our construction pipeline, so all of the hotels that are currently under construction, that has not slowed down whatsoever. We have actually exceeded our prior peak back in 2008, where we had over 200, I think if my memory serves me right, it was 211,000 rooms under construction in December of 2007. So it was right before the market fell in 2008. As of April, we have 220 plus thousand rooms currently under construction. So we are still continuing to build in this environment, which I think says a lot of the confidence that this asset class does have from an investment community. You know, we will come back. It's going to take a lot longer than it's taken in the past, but to stop these projects right now appears to not be an option, and we're not seeing the pipeline slow down.
So what is Vail? What is 200,000 rooms as a percentage of the total supply?
So right now, well, of the total supply, we're looking at about a 2% increase to what our existing supply is today, which is on average what our growth rate is. So if we look at all the hotels that are currently open, what will likely open today, we'll see a 2% increase in supply, because that 220 are not going to all open this year.
Right, exactly. So why are they still under construction? I mean, is that, you know, there's always this expression during downturns. I've always thought of developers like to continue digging themselves into a hole, basically.
Yeah.
I mean, I don't want to be too gloomy. We've got to look at the bright side, and we'll get to that. But tell me, why is that continuing?
Well, I think a couple different things. The funding is already there. The labor is there. You know, we came off of some of the lowest unemployment rates. There were people that were looking for jobs, and it was actually to a point where construction was starting to slow down a little bit because of labor cost, because of material cost. That doesn't seem to be the case now. And as I mentioned, the funding is in place. Also, what is quite unique is that, well, it's actually not unique. I take that back. It's very similar to what we saw in 2017, which the type of hotels that we are building are more in the select service, which tend to do a bit better in downturns because their overhead is not so high like a full service hotel. They also are often driven by more transient demand. They're not impacted as much as large group hotels, and that obviously right now, group business, it's really unknown on when that's going to come back and what that's going to look like. So about 71% of the hotels that are currently under construction are in that select service segment. So to answer your question on why is the construction continuing, it's also not expensive to build those properties, as expensive to build those properties as a full service, and they can be opened up faster if needed. So if this was all a luxury build or big boxes, my guess would be we would probably have more deferments and postpones.